the first presentation after lunch is always the tough one, particularly for some of the friends who travel from different time zone. This is time for you to, probably doze off a little bit. So I know we're facing a difficult task to deliver something that is of interest to you. But I think the subject that TDC has asked me to discuss is a very interesting one. So I want to give you, I hope by the end of the presentation, you can take 2 or 3 useful ideas or tips home. If we can achieve that, I'll be very pleased and I'll be very thankful for TDC to give me this opportunity. I know all of you here are from different parts of the world, but you have a common denominator that is doing business with Hong Kong or doing business through Hong Kong with the rest of the Asia. So my presentation will be focusing on how we can make our business better and more profitable in Hong Kong or with Hong Kong or through Hong Kong. So that will be my focus of the presentation. So the first part, I like to give a very high-level understanding of the so-called new leadership and new China. The current administration, as you know, came into office November last year. So about a year ago, after the party Congress changed the leadership. Essentially, over the past 12 months, the current leadership has done a lot. I summarize them into mainly two or three parts. Essentially, they have consolidated their power through anti-corruption, anti-graphing, through disciplinary exercise, and also through change of guards in various levels of government. So it is, I think it's no doubt in everybody's mind that the current leadership, by now, everyone believes that they are firmly in control. They will make their voice heard. They will make their order taken by people from all levels, from central all the way down to the grassroots. So that is a common belief now, today. If there was any doubt 12 months ago, I guess there's little doubt today. The second major development, I think people are today are clear, is that the new administration has been telling people that we're going to do more reform, we're going to make more market-driven reform measures available. We will open the economy more to the rest of the world and to the private sector. 12 months ago, when they said that, if there are any doubt in people's minds, this past third plenary session has confirmed that a lot of them are actually in action, have been in action, or a lot of them are in detailed planning now. So a lot of doubts in that regard has gone away. And Mr. Zhe will talk about the free trade zone, which is one of the many new thrusts that the government has put in place. So the economic, the political side, they've consolidated the power. They have improved the execution efficiency through the government, through the consolidation of the power. On the economy side, they have basically following their promise. They are telling people that we're going to make market a more fundamental mechanism to allocate resources. They told people that we're going to make our currency more accessible by foreign investors, foreign traders. They are doing that. They made the promise that we're going to liberalize our financial system a little bit more, they've been doing that steadily, step by step. They liberalized the lending rates, banking lending rates used to be fixed. No matter you are a double B rated company or a triple A rated company, you get loans at the same rate. Today, you are differentiated. Now, the next step would be the deposit rates will be liberalized. In conjunction with that, they will set up a deposit insurance company so that they can liberalize the deposit rates a bit more. So a lot of the reform are coming into place. So you could tell that if there were any doubt last year, China economy slowed down, there will be a hard landing. The Hong Kong stock market has gone through a trough period. Most recently, if you look at in the past 3 months, a lot of the doubts has gone away. And it's also reflected in the Hong Kong stock market. The market has come up quite significantly over the past 3 months. I was just sharing with Mr. Zhe and Nicholas just now that it also reflects in my business, which is the financial services business. We had the second best year so far this year in Asia Pacific region, and largely because of a robust performance in Hong Kong, China, as well as Japan, which is also a outperformer this year. So overall, that's the current status of the economy. Going forward, I guess the market consensus is that Chinese economy will grow somewhere between 7 to 8% band. The more aggressive analyst will tell you it's going to be 8%. The more conservative analyst, economist will tell you it's close to 7%, but I have not seen people talking about anything below 7%. So given the size of the economy, yet you can still grow at 7% or 7.5%. It's very impressive itself. JP Morgan's forecast is somewhere around 7.5%, and our forecast on the currency is another probably 2 to 3% appreciation from now to end of next year. So we're talking about appreciation from 6.1 RMB to US dollar and appreciate to about 6 RMB per US dollar end of next year. So the market sentiment has improved quite a bit. However, if you look at the real economy, I know a lot of you have strong connections in Hong Kong. You may still have investment in this place. We are often asked by our clients, where do I put my money if I want to capitalize on the new growth, new development opportunity from China? We often tell people, stay away from the old China and try to get into the new China. So what are the old China that people are referring to? Those are the industry that were the pillars of the Chinese growth in the past 20 years. The raw material, that's steel, mills, cement, manufacturing, shoemaking, shirts making. Those were very important industry to China. It has been. Those were important business to China over the past 20 years. What are the new China we're referring to? Those are the people talking about healthcare, people talking about elderly care because the population is growing older, and with one-child policy, that day will finally come where a couple will have to support 4 elderly retirees. So people think that's a good business opportunity. And service industry, consumer industry, environmental protection, food safety, air cleaning. Those things are referred as new economy. That you will find a lot of demand in those areas. So those are the sort of so-called older China versus the new China investment scenario. I will then now turn to Hong Kong. What is the role of Hong Kong going forward in this whole in the backdrop of a Chinese development? We've been talking about Hong Kong has to reposition itself vis-a-vis China. Over the past 20 to 30 years, Hong Kong essentially made money by doing two things. Hong Kong made money by exporting Chinese goods to the rest of the world, whether that's shoes, that's shirts, that's machinery, that's food stuff, anything that is made with low-cost producer from China and sell them to the rest of the world. That has been a mainstay of Hong Kong business. A lot of wealth were created by doing that. The other thing that Hong Kong has benefited extremely well over the past 20 years, essentially from the days when I arrived in Hong Kong from New York, that was bringing international investment into China. Direct investment through Hong Kong, in Hong Kong equities, where the issuer is a Chinese company. So if you invested in Tencent 7 years ago, you are now 400 times return. Okay, so a lot of the wealth was created through bringing international investment into China or play the China story. I remember when I arrived Hong Kong in '93 with Merrill Lynch, I read an article in the Forbes magazine with a cover showing one of the well-known Hong Kong businessmen. The title is "Invest in China with this man." So essentially, that man was the bridge between international capital and Chinese opportunities. There are so many wealth created in that way. That also comes with other professional services opportunities. If you are a lawyer, if you're an accountant, if you are a property valuer, surveyor, you name it, that has created a huge industry of services, particularly financial services, in Hong Kong. And that's where Hong Kong also made a huge amount of wealth. Today, the old game may not be playing as well as it used to be because the financial crisis in North America, the sovereign crisis in Europe, the structural change in Latin America, and so on and so forth. So, and plus, China has opened it up itself. So goods don't have to go through Hong Kong anymore. So if you are a midstream shipping company, you may find that your volume is shrinking because there are so many ports in China that can ship directly to Boston. Don't have to go through Hong Kong, for instance. So a lot of things have been changing. So then what's the new business model for Hong Kong? I.e., what's the new business model for people in this room that can work with Hong Kong or through Hong Kong to make a better business? Essentially, we look at from exactly the opposite angle. One, Hong Kong can be a window for selling goods and business into China. I was given a statistics last week. For the year 2012, the global consumption for luxury goods was about $207 billion US. 207 billion US dollars consumption of luxurious goods, out of which half of them, about 100 billion, were consumed by Chinese consumers, Chinese purchasers, whether it's done in Paris, in London, in New York, Tokyo, and a large part in Hong Kong. So Hong Kong has been working hard to capture that purchasing power. Hong Kong has opened up its tourism industry, and the flood is so much that Hong Kong feels overloaded now. The hotel rooms in Hong Kong has grown 300% of the past 6 years, yet it's still at 90% occupancy rate all year round, largely because of the Chinese tourism and increasingly shoppers from China. And that also makes Hong Kong unemployment rate at somewhere below 5%. Very tight labor market. So basically, essentially, if in the past it was Chinese goods going to international market, today we need to find a way to bring the international goods and sell them through Hong Kong into China. It doesn't have to be necessary. It doesn't have to be luxurious goods. China famously in demand of dairy product, for instance. It was a big business for companies in Australia, New Zealand, Japan, and so forth. People may have not noticed that. Just give you an example. About 2 weeks ago, there were news that China was going to loosen the one-child policy, i.e., if both couple were from a one-child family, you were allowed to have more than one kid. To avoid this, I say the reverse pyramid where the couples would have to support 4 or plus elderly retirees. To avoid that, now the policy has loosened a little bit. But on back of that news, all the dairy stocks in Hong Kong jumped on average 5% plus on one day, because people think there will be more baby, they will need more milk, dairy products, and so forth. So I'm trying to say that we try to figure out where is the best way to make money out of this trend, where a large middle class is coming into play, and they will want to travel to international places. 5 years ago, when I was meeting a large institutional investor, and he said, we agree that the middle class is coming. Where is the best point to benefit that? And I told them, that was 5 years ago, I said, if you look at what happened to Japan and what happened to Korea later, and then Taiwan a little bit later, you find that in that sort of tipping point where it turned into a middle-class society, one of the industries that benefit the most is the overseas travel business. Remember in the 80s, there were so many Japanese traveling to Hawaii. The Hawaii stores were all having Japanese sales lady signs and all that. Now you're seeing that in Paris, you're seeing that in other major cities, even in Japanese airports, you see Chinese signs putting up. So there is a reason. If you're in Heathrow, you find a lot of shops have Chinese-speaking, Mandarin-speaking sales lady now. That's just one example. So basically, Hong Kong is positioning itself as a gateway to harness the purchasing power from the upcoming middle class and benefit that purchasing power by introducing new goods and services that the middle class are demanding. So that's one. Secondly, is Hong Kong is positioning itself to become a bridge to bring Chinese capital to your company. If in the past 20 to 30 years, it was the international capital coming into China to get the higher return, today, that game is still going on. It's still a 7% growing economy, but there's another way to benefit it. That is, think about getting the investment from China. Last year, Chinese company made over $90 billion direct investment into different companies. Obviously, they started with resources company. If you own a oil sands company in Canada, the first one you think about is try to get a Chinese investor. You may get 10 calls in the next week asking about working with you. If you own a iron ore assets in Australia, you will find the same. And then the Chinese companies, investors have moved from resources to technology companies. The IBM ThinkPad now is owned by Lenovo. Volvo now is owned by Geely, a Chinese car manufacturer. You find a lot of the consumer brands, they are now owned by Chinese companies. And it's mutually beneficial, by the way, because China is this, the large market, if not the largest market. So by having a Chinese shareholder or a Chinese owner, it's beneficial to both shareholders, employees, and the executives. I was just on the phone on my way to this conference. I was on the phone with my colleagues in London who was asking that we're talking about a Chinese company was going to spin off one of his new acquisitions in Europe. And they were asking why would this large Chinese company wants to do that? Is that because of money or anything else? I said, yes, it's about raising new capital, but also more importantly, the Chinese company would like to have a separate listed European subsidiary so that the management team, which are all European, have proper incentive program. They can get share options of that business unit because the CEO of the London company doesn't necessarily want to own stock of the parent company because the parent company may be involved in property and other things. So if you have a separate listed company in London, the CEO of the London company will get options of that company and properly incentivized. And also you will have a separate governance structure to keep that company away from influence from the parent company when that becomes necessary. So again, consumer brands, manufacturing assets, Zoomline, a construction machinery company, acquired a Italian cement mixer called Chifa, and the synergy was quite obvious. Most recently, acquisitions start to happen in consumer goods like the biscuit, Weetabix in London, happened in the pork business, that's Smithfield in the US. So that's at the corporate level, you see a lot of money flowing from China to those places. And let's don't forget, there is also a larger flow of individual investors who are driving up property prices in San Francisco, in Vancouver, in London, in many other places. So individual investors are also bringing their capital out. And last but not least, these investors, the Chinese institutional investors are making investments in your hometown now. You read in the news that investors from China are owning probably close to 3% of the Heathrow Airport Authority. So there's this money flow coming from China to the rest of the world, and we need to think about how to benefit from that money flow and from that new investment opportunities. Chinese Prime Minister was in Central Europe last week selling, and I was just reading the news that he become now a big salesman of some of the Chinese technology, including high-speed rail technology, to European countries. In the past, the game was, we call it shirts for airplane. Basically, Chinese export shirts and buying airplane. Today, they're talking about high-speed rail for rice. So basically, Chinese is exporting high-speed rail technology equipment in exchange for rice from that particular country. So you can tell, Hong Kong, as all of us are friends of Hong Kong, we work here, and we will be able to, we are better positioned to take advantage of this Hong Kong unique opportunity and make our business more exciting and more profitable. With that, I will stop, and I'll be happy to answer any question you may have after we listen to Mr. Zhe's presentation. Thank you.